Welcome back to Dear Rochester, Retire Well. Here's your host, Dave Paulsini, CFP.
Welcome back, folks, to Dear Rochester, Retire Well. We are here today with Matt. Matt, how do you say your last name?
Mossbarger.
I knew that. I just wanted you to say it. How you doing, Matt?
I'm doing well. Thanks, Dave. Thanks for having me. Super excited to kick this off.
Yeah, you got it. So for the listeners out there, Matt is the co-founder of WealthFeed, which is an AI-driven business development tool used by financial advisors and insurance agents nationally. That's how we met Matt. And Matt and the WealthFeed team help financial services professionals accelerate their marketing strategies, identify new business opportunities to grow AUM, and enhance their client retention. Before Matt worked at WealthFeed, we're going to get into WealthFeed, but before Matt worked there, he spent some time in investment banking and 5 years with JP Morgan's private bank. And it was through that experience that Matt and his co-founders developed WealthFeed, and they found the need for it and wanted to solve the struggles of advisors that deal with the organic growth issues that most advisors face, right? That's the hardest thing, as advisors know, is typically finding the next new client, unless you're very experienced and you get into it. But Matt and his team have developed a program that help out with that. That's why I wanted to have Matt on today. So Matt, I want to get right into something, and then we'll back into WealthFeed and the AI tools. That's obviously a hot topic right now. But when you're identifying folks that financial advisors can reach out to, what areas are you looking for? How are you guys finding that? And how did you guys make that happen?
Yeah, no, totally, Dave. And thanks for that. It's a great question. There really is no one size fits all answer to that, but timing really is the thesis of our business, WealthFeed. And, life events, particularly those that bring money into motion, literally, or bring money top of mind, those are, a great place to start. So, when I was an advisor, you'd be shocked by the number of times I got asked, why would I hire a financial advisor if I'm in tune with markets and I trade my own portfolio successfully? But the answer is pretty simple. And it's the fact that investments is really just, one part of the equation. There's a whole nother planning element to it that's often overlooked. And so what we've noticed through personal experience in the space and, also a few research studies that kind of support the case is that planning is of the utmost importance following major life events. We call them catalyst events, but those include inheritances, moving states, changing jobs, becoming a new parent, selling a business or selling stock that you've held on to for quite some time. Maybe it's, reaching retirement age, and a few others that we track on our platform as well. But, following these life events are when individuals should be seeking guidance from an advisor.
Yeah, and that's typically through in my 20 plus years when we will proactively hear from the prospective client is proactively reaching out. Hey, I'm just retired, or hey, I just moved, right? So you guys are even getting ahead of that. So if we had to pick, and by the way, I want to back up. You said just the investments are one thing. That's actually where SixPoint came from. I don't know if you know this, Matt. SixPoint, the name is 1 point is investments. Yep. Then there's retirement income, risk management, tax planning, estate planning, and custom goals. So again, for the 100th time on this podcast, that's where our name came from. But and I think you can dive into this with the next question that I have for you is, let's just pick 3 of those. You said job changes, retirement, inheritance. That's what I'm getting a lot of that. And we'll get into each one a little bit, but like for job changes, give the listener a reason coming from you, not me, a financial advisor, why they should work with an advisor when they change jobs.
Yeah, sure thing. So, changing jobs is definitely an interesting catalyst event. I've always felt personally more comfortable getting a second opinion from an unbiased party rather than my soon to be ex-employer about things like, finding out when my insurance coverage ends or, trying to calculate how much pay I'm owed upon leaving. But, there are 2 bigger topics that come to mind when I think about someone looking to change jobs. And those are, one, what are the pros and cons of, maybe leaving my money in my current 401k plan if my employer even allows that, versus rolling that into an IRA or moving it to my new company's 401k plan. And then the second big consideration, at least for me, is, assuming that new job comes with a unique benefits plan and, a new compensation plan, what are some of the implications from a more personal finance or budgeting perspective that I need to be considering?
Yeah, I like it. And the new plan, right? So whatever they have to offer, what are we contributing? How much are we putting into each account? What should we be doing based on that new comp? So again, I want it to come from you, not from me, Matt. So I'll stop there. But give us some for when you get folks that you guys identify as recently retired or about to retire, right? It's recently retired for what you guys. So they retire there's so much there. We could talk about this for an hour, but give me like your top 2 or 3 things that why folks should hire a financial advisor when someone retires.
Yeah, so what we're tracking are individuals that are reaching 59 and a half, which is a super important age. And, I think, the most important time to construct a financial plan and stick to that discipline plan is in retirement, when you start living off of your savings, obviously. And so, because old habits can be tough to break, I think it's critical to start talking to an advisor pre-retirement. And so that's why we chose 59 and a half, given the average age of retirement has actually increased to past that nowadays. But there are important ages to consider, obviously, when you're, considering taking Social Security, and, when you need to start taking minimum distributions from your retirement accounts. These are just all things that, I personally wouldn't want to, consider alone, as I'm going into arguably one of the most important times to be super disciplined with your finances.
Yeah, there's a whole retirement income planning. I mean, there are several tools out there, and then just the timeline of retirement planning itself. A lot of folks can retire at 55, right? But we can't take IRA money till 59 and a half. And then when do we take Social Security? How do we do that with our spouse? What happens with Medicare? When do we have to take our RMDs? What about passing money on to my kids? How do I do that in the most efficient way? I don't want to make people anxious right now, but like I could keep going with the retirement income planning is extremely important. And when I get folks that say they want to do it themselves, I'm fine with that. They can do it. I just think that for a lot of people, it's really hard to know all of this stuff, and then factoring in the detailed estate planning and tax planning. What's your tax bracket, guys? How much are you going to owe in capital gains? Where are we taking money from so that we don't trigger the next Medicare tax bracket, right? Are we running our 1040s in retirement? Are we doing the tax planning so that we can pay less today and less in the future? And then for a lot of folks, a lot of people don't need the retirement money. I've been meeting with a lot of people that are just, I don't even want to take it. So, but they have children, right? So if you have $1 million in a 401k or IRA, and then it goes to your children, is that the best way to give them that money? Maybe, probably not, but maybe. So all that stuff is involved with the retirement income planning when you tie in tax and estate planning as well. So, and that actually leads right into the third one. I didn't do that intentionally, Matt, but the inheritance planning. That's a big one, right? We have the great wealth transfer happening. It's trillions of dollars are going to be passed down. A lot of these folks that have saved for a long time, again, they don't need it, and they're not going to spend it because of their habits. So when we're doing and planning for inheritances, someone passes away, someone's getting an inheritance, why should they hire a financial advisor? Yeah,
no, totally, David. I think inheritances, they're certainly a touchy subject, given someone's, passing away that you likely care a lot about. And so in my personal opinion, it's maybe all the more reason why a beneficiary of an estate should speak to a financial advisor and take some of the emotions out of the impactful financial decisions that they're about to make. I'm sure that statistic, and you mentioned it, right? It doesn't come as a surprise to a lot of your listeners, but $3 to $4 trillion are expected to get passed down year over year between now and 2045 to Gen X, Millennial, and Gen Z households. So, the time to be talking about this is now. And in some ways, this catalyst event is possibly the most relevant of them all. And when and why financial advisors should be, looking at this trend and theme. So, if you're inheriting property, some of the basic considerations you might speak to a financial advisor about are, one, is there a mortgage on that property? Does it make sense to leave it in place? Does it make sense to pay it down, given the current, economic backdrop? Speaking to a financial advisor about that decision can make you feel way more comfortable about it. And then also, what would the capital gains impact be of selling the property, or would I benefit maybe from a step up in cost basis? So again, just things that, speaking to a financial advisor can certainly help make that decision easier for. If you're
I could ask you some.
Yeah, go ahead.
I was just gonna say I could ask you so many questions on cost basis and step up and everything, but we'll save that for a few minutes from now, because it gets very technical. But that right there is why somebody should hire a professional. Again, I don't want it to come from me, but it's true.
Yeah, it is a technical decision. And again, specifically with this inheritance catalyst event, it's an emotional period in time for most folks. So, speaking to someone who is unbiased and really just wants, the best for you is super important. And then on the flip side, if you're inheriting investments or maybe cash, you want to work with a financial advisor to assess how those investments are currently allocated. Should I consider rotating into different pockets of the market? maybe even for those individuals that are savvy, market followers, that you might think the best move and the best approach, but getting a second opinion is often beneficial. And then given that step up in basis, should I sell now and maybe do a full reallocation? And then of course, from a broader planning perspective, how does this inheritance change how I want to set up my estate plan as well? People often forget that since they're analyzing their loved one's estate plan and their will, but making sure that you're updating your will now that your financial balance sheet and picture has changed is super important as well.
Yeah, I had 3 meetings last week, Matt, with current clients. Each of them had parents that were still alive over 90 years old. And it's hard to put that into your own retirement plan. And I heard the same thing from all of them. They don't know each other. And they all said separately, I don't want their money, but I'm going to get it. And these folks, they're not very, very wealthy, and they don't need, it's just, I think a lot of people are going to get money and they either feel guilty that they're going to inherit money, or they don't know what to do with it. They don't know how to plan once they get dad's IRA, right? I mean, if he's 90, there's probably not much left in there, but there's other stuff that's happening. And each of them those parents had houses out of state, and none of them want it, right? So none of them want the house that's in Florida, and they might have 2 or 3 kids that are in their 60s. I feel like those are all, there's going to be like a fire sale on real estate in Florida at some point in the next 20 years. Yeah. We should all be ready to go buy a bunch of property in Florida, because those folks are going to have to get rid of that property, and the kids most of the time they don't want it. Right. They're just going to sell it and get rid of it. But a huge part of it, inheritance planning.
Yeah, Dave, we've actually seen, through the launch of our platform, a lot of real estate agents and brokers take an interest to the data that we have. Like you said, oftentimes if you're inheriting a property 1,000 miles away, there's a lot of equity in the home. Maybe you have high credit card debt. Oftentimes that property is going to transact. So to your point, a lot of our data is fairly predictive. But again, it's these considerations that you don't want to make those decisions alone. And so leveraging your financial advisor network is critical.
Yeah. So I have a cousin who's in real estate, and he is doing a probate leads program. It's probably very similar to what you guys are doing, and it leads into so tell me about what you guys are doing now. We've gone through some catalysts, job changes, retirement, inheritance. You're working at WealthFeed. It's an AI tool. Tell us what that is.
Yeah, sure. So we actually track 11 different catalyst events. And so we have 3 core features on our platform. Advisors can sign up. It's a month-to-month platform. So, the service is yours for as long as you want it. You come on and pay for what you want. But, the first key feature is discover. And that's finding new business opportunities, finding individuals going through these money in motion events that should be hearing from a financial advisor. So you can come in and plug in your geographic preference if you want. Maybe it's a net worth segment preference if you want to focus on individuals with a certain net worth or balance sheet level. Then you can also focus on specific catalyst events. So I mentioned we have 11 new jobs, individuals reaching full retirement age, selling a business. Those are 3 of the 11. And then from there, we actually offer, a full suite of additional filters that you can sift and easily sift through the data with. So you can apply an alma mater search to it. For me, when I was a financial advisor, if I could get in the room with someone that graduated from the University of Delaware, which is where I graduated from, that was a home run. So being able to not only find money in motion events that are taking place in your backyard, but add a layer of, filtering to that to focus on your highest converting prospect type is the benefit that we're giving to advisors. And then, we do have 2 additional features. One is an enrich tool, which helps advisors, fill in the gaps. Maybe they receive third-party leads from somewhere else, but that data is often fragmented. But we'll help enrich that lead with some insightful data points that we're leveraging through public records and public databases. And then the third tool, which brings in to the conversation client retention, is our monitoring capability. So allowing advisors to stay on top of life events that are taking place in their current book of business so that they can be that first advisor to go ahead and reach out. If, hey, I identified that 123 Main Street, a promotion took place there, or they just inherited assets, you can go ahead and call on that client before another advisor does.
Hey, okay, so I feel like the first part was about listeners, right? Like the average listener, potential client. That's for advisors. If I'm a listener that is like potentially going to work with us on our financial planning services, and they get a call from a random number, and that random number, obviously you don't say this, but hey, I see you just got an inheritance. Where are you guys getting that? And do people think it's creepy?
No. So we definitely don't suggest that any advisor takes that approach. All these life events are super personal, and so reaching out in an invasive manner is not going to bode well for you. It's not going to, make the recipient of that phone call feel very good. So taking more of a right time, right place approach is really our goal and what we're advising clients do. We're giving you the targeted audience that you should be reaching out to, right? It's no different than why, Anheuser pays $10 million for a Super Bowl ad, because those are beer drinkers. So we're giving you the audience that you should be marketing to, because these are the ones going through life events that are eventually, if they're not ready to do it now, they want to wait for some of the dust to settle, that's fine. But sooner or later, they're going to seek guidance from a financial advisor more often than not, given what's taking place. So, what we advise advisors do is, reach out, introduce yourself, ask to expand networks, and maybe grab a coffee or spend time on a 5 to 10 minute introductory phone call. But you don't need to lead with the catalyst event. Lead with the services that you provide for other families and clients. And, if those are relevant, given that underlying event, then they'll resonate with the prospect.
I'm just picturing, like, we moved from New York to Florida and then back to New York. And I'm picturing someone calling my wife saying, hey, see, you're new to the area. We're a financial firm in town, right? Obviously there's better scripts than this, but and I'm just thinking of the listener out there that's like, is this why I'm getting these phone calls? Like the AI tools out there that identify these events, right? Can you, and I don't know if you can get into this, but how do you guys use AI or tools to, like, let's job change, for example? Like, how do you know that?
Yeah, sure. So we're leveraging, about a dozen different public record databases. So, job changes and promotions are actually a fairly easy one. We're just leveraging LinkedIn for that information. So it's real-time feed. Okay. When someone goes from, principal to partner, or, manager to senior manager, that's getting picked up in our database. Some of the other ones, we're going right to source data. So, for business sale or insider stock sale, we're scraping SEC docs and, Form 4 filings. For, some of the more life event ones, like, individuals that are recently separated from a spouse that might need to consider changing how their accounts are titled, or, creating a new financial plan. We're just going straight to law dockets and court filings for that information. Where the AI comes into play is twofold. One, it's how we're getting some of that data for the remaining life events. And the second big component of the AI is, and this is still in the works now on the WealthFeed side, but we're building lookalike audiences for advisors. So, if you come in and, you have a propensity to unlock prospects that look like a certain type, we're going to then be able to go ahead and suggest that, hey, another prospect that just came through our feed looks exactly like the prospects you've had success with in the past. Why don't you go ahead and give this person a call? So that's where from the WealthFeed side, that's where the AI comes in.
So you guys, the money emotion events, the catalysts that you guys call them, there are 11 of them. You guys, what is the most successful way that advisors are reaching people? And then I have a question for the listeners. If the listeners could send me an email or a text message saying, this is how I would want to hear from an advisor, that'd be really helpful, because you don't want to be creepy, but I know that you need help. And even if it's not with us, I know that you need to work with a financial advisor, because most folks that are trying to do it themselves, that's okay. But I would say you have to have three things, right? You have to have the skill, the will, and the time. And most of the time, if you have the skill, you don't have the time, because you're skillful enough to be doing something else. If you don't have the will, a lot of people, I like it, I might be okay at it, but I just don't want to handle this. I want to outsource. It's like, I don't feel like mowing my lawn, I'm going to hire somebody else, right? Like, I don't feel like doing that. And then the time, to really do this stuff takes a lot of time. I mean, we are constantly, as advisors, listening to podcasts, doing continuing education, getting designations, reading articles, constantly following the markets. Or if we're not even doing it, we're hiring people that report to us, right? So if you don't have the skill, the will, and the time, I want to ask the listener, like, what is the best possible way to reach out? But how are your advisors having success reaching out to these folks and not, I'll say this nice, like getting hung up on right away or being told bad words?
Yeah. No, totally. And for starters, that first 10 seconds on a call is critically important, right? So again, making sure that you're not reaching out in an invasive manner is crucial. But the filters that we offer on the WealthFeed platform allow advisors to get really granular in their search and find some sort of common denominator or common thread that they can go ahead and reach out with. So, hey, I graduated from the same university, or I work over on Main Street just around the corner from you. Let's grab coffee. Something like that to disarm or allow the prospect to take their guard down a little bit, because it's a local presence. It's not, a cold caller calling from miles and miles away. But, where we've seen advisors have a lot of success actually is over LinkedIn, right? So putting a face to your name is often super helpful. We do a ton of research, and the more frequencies you do reach out to, prospects with and on, oftentimes, the more comfortable they get with your services. It takes the human brain like 7 times to see someone's face and name to understand and fully get the services that they offer. So, if you reach out over LinkedIn, they see your face, they see your brand, they see your name, and then you shoot them an email, oftentimes, that name's going to ring a bell, or that face is going to ring a bell. And so you're going to see a higher response rate.
So, what's, and on the other side of that, how can our listeners get a hold of you?
Yeah, totally. So our website is just wealthfeed.com. So it's WealthFeed.com. My email is Matthew with 2 T's at wealthfeed.com. Would love to, set up a demo with any advisors out there listening that want to give it a shot. It's fairly easy and an intuitive tool, but I think a demo always helps, so I can go through some best practices and tips and tricks.
So Matt, hey man, listen, I appreciate the time. I want to have you back on after our success stories, but we'll leave it there. So folks, make it a great day.
Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. All investing involves risk, including loss of principal. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. Information here is provided in part by third-party sources. These sources are generally deemed to be reliable. However, neither SixPoint Financial Partners, Private Client Services, nor RFG Advisory guarantee the accuracy of third-party sources. The views expressed here are those of SixPoint Financial Partners. They do not necessarily represent those of Private Client Services, RFG Advisory, their employees, or their clients. This commentary should not be regarded as a description of advisory services provided by SixPoint Financial Partners or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Securities offered by registered representatives through Private Client Services, member VINRA, SIPC. Advisory services offered by investment advisory representatives of RFG Advisory, LLC, RFG Advisory, or RFG. A registered investment advisor. Private Client Services, SixPoint Financial Partners, and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.